Afternoon to every subscribers. Welcome to the channel. Me and Algo, we are greeting you from Suriname, and are going to be doing the review, past week review, and also the analysis for the week, and we will be focusing to derive the trading plan also, and also the weekly bias. So if you are struggling with bias determination, you are on the right place. Welcome. Before we continue, let me have this disclaimer before you, underlining that trading does involve risk. Everything that I'm showing you from this channel is for education and entertainment purpose only. If you so decide to take this trade, make sure you contact your advisor, your financial advisor, and make sure you know what you are doing in the market before you execute based on any information shared via this channel. Welcome to the channel. This is book 9. Those that are subscribers and that have been following us. Book 9. The dynamic of book 9 is that I'm focusing on a group, students, a group with me, and we are going to go to the chart to show. This is a chart. We'll be doing the analysis from the micro S&P, and we'll go from 1 minute and then to the higher time frame, and then come from higher time frame down to the lower time frame. First of all, let us have my chart clean with no other lines, and that's what I put on it. Welcome once more to the chart. It is the 1 minute chart. We have been a Friday. I did some record 2 trades from this account, 2 trades, and there were 2 losses because of what I was hunting. I backtest and I learned from them. I learn from them, and I have them in my logbook so that I can now use that experience going forward. Actually, I have already programmed my mind to see what went wrong on Friday. This is the 1 minute chart. Normally I make notation or annotation with the color green, and this is color, this green color I use for annotation on the 1 minute chart. I will go to the 5 minute chart. It is actually my hunting time frame. This is where I hunt setup for execution. I use both the 15 minute and the 5 minute to hunt setup. And what I have been hunting on Friday was a market maker, potentially a market maker sell model. I was looking at first I saw price rally with the, I think it was which data. If we go to the calendar, this is data this week, last week data. Past week data, 1 minute. This data, the non-farm and employment change data. When I saw that, I reasoned, and I was not at the execution, at the delivery of this event, but I saw first price drop. This is the review. Trade to this relative equal low, trade to this relative equal low, then it rally and take the buy side liquidity, both buy side liquidity into form, and left this relatively equal low. And on the 50-minute is also a 50-minute CB, which we will see in when we continue. When I saw price was trading, I marked this consequential encouragement, midpoint of this large long wick, the midpoint of the long wick. I marked it out and saw price respecting it, trade to and close respecting this and start dropping. When it dropped this aggressively, it did drop with displacement. To take this low, a swing low, I enter and left us a CB. I enter at this candle. I think I still have my trading setup, execution. Okay, yes, I entered at this. The first entry was on this candle. Then I entered here the short, this short. I had placed my stop loss on the right place and enter here, having projecting toward this first take profit on this side. I later add another contract, and I was aiming to take another profit on the downside. And the reason why I was hunting that setup is because the market had made higher high, cleared the buy side liquidity, and there was no terminus here for us to reach. I reasoned with the logic of model 22, and I got stop out first right here when we traded above the swing low. When we start going high and this long, I saw this long wick, I knew we were going high, and I was thinking about taking this one, making a turtle soup. I record this trade, this loss, but it is good in a review to talk about it. I record this. I saw this swing high taken, and this drop with this wick. I reasoned and logically expected it to be a what we call a turtle soup. But by the time we create this shift in market shock to the buy side, I knew that it was this high taken with displacement, swing low, and this were the buy opportunity going up. I did not enter these buy opportunities, these going up high, simply because I did not have any terminus to have as my terminus, the end of the trade, my take profit. I could have used the Fibonacci to determine that where to trade and how high I could have reached. I could have then used that, but by the time when I was reading the tape, that was not what I have considered. So I left. I took a loss on the AM session, and then later at the PM, when I saw this drop again, the logic, I saw this drop, I assumed the the swing high taken, this drop being displacement on the 1 minute chart. I think I saw, yes, I saw this drop, one of the drop taking this swing low, and I entered right here, but actually I wanted the market to trade past this 5 minute before I enter. I enter here and got stop loss also right here, leaving us with two lost trades at Friday, but two losses that I think we will regain very quickly. From the 5 minute perspective, actually from the 5 minute perspective, we have created a shifted market structure right now with displacement, strong round 2, left us a SIBI, and we have traded into that SIBI, and now I think price is repricing and going to go lower. Actually the setup that I was hunting on from the AM till the PM on Friday. However, we will be trading this week. That setup will be in my mind going forward, but it is low time frame. We will be going to the high time frame and do some analysis there. From the 5 minute you go to the 15 minute. This is where I initially saw and start thinking about the expenses being a buy side delivery on a market maker sell model, and then I wanted to see the sell side delivery even before we rally up there. The 60 minute time frame, let me take this off. That was the week 60 minute time frame. We are seeing, take this off 15 minute annotation off, 5 minute annotation also off. This is the 60 minute when we will be going from the high time frame to the lower time frame and do the analysis. We will put some more annotation on the chart. So that was the review. For now, I think we can go to the 4H. There's no annotation on the 4H. Still have some reasoning here. I was also discussing the final. When I was trading the Friday PM surface, I was looking at the last hour, last market, studying also the time that I normally see price do some manipulation or run to some target. We have been taken out. That is what I show you. When we have been taken out, I start doing some study to see how the model would paint out. It did not paint out. I think what happened is I know in my study I make notice of what happened, why it did not work out. That is on the 5 minute. This is the lesson that I noticed. When price was rallying in this Judas swing, this high have not take this long wick high, this swing high. Because it have not take this swing high out, reading stop loss, we cannot assume that this displacement is a displacement that is going to hold stand. So even when we saw that this is relative equal low, prices trade to take some swing low here with displacement, because of the lack of price delivery to not take this swing high first, is what I would want to see, is to price to rally from the 830 or 950 930 in the Judas to first take that swing high and then drop with a displacement to take the swing low, this one in particular, to take the swing low. That would have offered me to the swing low taken with displacement. Look in the displacement layer, see the fair value gap. I noted the fair value gap, but it was not good timed or good hunted fair value gap. So the model is still in place. What the logic has been utilized. The reason why I have expected this run to be valid, to be counted as enough for the model to work out, is because of the consequential encouragement of this long wick. See that the market price respected this consequential encouragement and dropped to take this swing high with this swing low with displacement. Leave us a busy, trade into the busy, and in normal term, by a sell side would have been the place to trade to. Okay, that's good. We did not win that trade. There were 2 trades taken. Maybe I can show those trades. 2 trades taken, and there were 2 loss from my account, the paper trade account I am trading with, because of working with some friends. The first trade we lost is $84. We put a trade management. The second trade we entered with one contract, and we lost $42. So we still, this is the first and the second trade, still the logic is there. What we will be doing, we are now in drawdown. What is the mental preparedness? How do we prepare to go to the market? What we will be doing to correct the drawdown, and how will our mental faculty be made ready to come out of the drawdown and become profitable in trade. So our first act or practice is that we will be doing high time frame analysis. It's 1 month. Normally what we do, start with the dollar index. Dollar index does have some painting on it. I want those to come off. Click all. Okay, that's a monthly chart of the dollar index, and right here we can make notice of this SIBI. This is what we are looking at, a SIBI, and it is recommended to take in account not only the SIBI but also the volume imbalance of this monthly. Go very quick. It is a SIBI, sell side imbalance, buy side inefficiency. You see the SIBI, there is room for us to trade there. If you look at the candles, the candle body, we are looking at almost relative equal lows. If you look at the candle, we will take that being a swing low under which lie sell side liquidity, and we want it on the right side. We have seen that there is also a busy here, buy side imbalance, sell side inefficiency. What are we doing on this chart? We know that the bond market and the dollar index, the does have influence on the dollar index, so we won't take those into account now. What we are doing is that we're studying high time analysis, try to capture and understand what the market has to do and where the market most likely will draw to. From the weekly perspective, there is some long term, there's a swing low here. One can put it on the chart. I want to have this order block right here, for it is a bear order block. Note it on the chart, not to have a too basic chart. This wick that dropped into the order block, and actually the first question that we ask ourselves is, where are we right now? This is where we are. You can, to define that, you can have your Fibonacci extension taken from high to low. We are in discount of a range that has been established, in discount of that range. And where are we? We are in discount. We have from where does we come from and how strong? We come from this SEBI that has been traded to, used a couple of times. There is a rally into a BAIS. You see there is a rally into this BAIS, and then a drop onto this consequential encouragement of this wick. The algorithm sees wicks as a gap, so we have dropped into it, and now we start using this consequential encouragement of this wick, start going up. We have not yet in this upward move taken a swing high, so for now the prediction is that we are looking for price to rally, and that would be from discount into that premium, and take first of all that swing high. Buy side liquidity. From this monthly perspective, what we are looking at now is we want to see price rally to the upside and take this swing, how the liquidity that is above the swing line actually also into a part of this. You can adjust this and put them like this. This liquidity is still to be made balanced, is still to be made balanced, and it is a strong draw toward the buy side. Where are we now? We are here in discount. Where we come from this order block. This dipped into the consequential encouragement. Previously it had made balance this BAIS, and now we drop into it, and we are rallying toward this side. And if we take this inefficiency and trade above it, we might have this as our swing high with some low. This is swing high. Buy side liquidity is above of these. Now the range expansion, looking from this time frame, the range expansion, I want to have it from where we are right now. The range expansion toward this side is that we want to see if price will rally toward that side. We want to see price first go and hit this. What we must see, and I want to make notice of it, is looking at these relative equal high. They may be short terms target to aim for also. They are relative equal highs. Let me mark them relative equal highs. From the monthly perspective, equal high, and then we have buy side liquidity. There is One can call this a balanced price range, and see how an equilibrium price have react on the balanced price range. There is a SEBI and a BAIS right here. Price trade past it, and I want to see how price will trade balanced price range, the equilibrium price of it. For now, price is respecting it. We want to see the body, the price trade maybe toward this to clear this buy side liquidity to the midpoint of this tail. It's still there. I allow price to reprice, so that would be at this order block. Maybe price will drop, and then see price go further to the upside. That is what we will be going to the weekly chart to hunt. If this is not regarded as a balanced price range, it might be called an inversion fair value gap. That is, this drop create this busy. We trade past it, and now we're dropping into it to step forward. So it can be seen as also an inversion fair value gap. I want to leave it like that, but the reason is clear. Take a picture. This is the trade, the Friday trade. I was reasoning and discussing why and how I think price will be doing it. We covered it in the first part of the first part of the review, and now we are in the analysis part. Now this is the dollar index. What are we doing here at the dollar index? We want to see risk off, risk on scenario, and because they have worked this side, the range is being this high to this low. This discount has been worked. I'm expecting price to rally to the premium side, even if we will drop further to the downside. I'm expecting price to rally to the buy side. I will be going to the weekly chart to find evidence to either negate this buy side idea or confirm it. The weekly chart, we are annotating the weekly chart with green, and right here we are looking at a weekly SEBI. These are the annotation that I have on my chart. I think I can use this one. The best is to keep the monthly annotation in the background, and so you can, what we call the price delivery continuum. You have in the background, you have the monthly annotations. SEBI. There is room for us to trade toward that. If we look at the chart from this monthly, the price is now practically dropping toward this how you call it, this order block is trading now at the equilibrium of the balanced price range, or the inversion fair value gap. It trade past it, but we are looking for price to trade toward that side. And what most likely I'm going to be hunting is that price to drop the first part of the week toward to clear these relative equal lows on the weekly chart. You can make notation of it. These relative equal lows to be cleared. use this color for my weekly annotation, relative equal low. And there we have sell side liquidity. And then to rally, to engage the monthly relative equal high as first liquidity, but really to trade up into premium and to engage the liquidity that is here, and if and can rally toward. I am looking also at the influence of the year, the seasonal influence. By now we are in the summer influence, so we might be seeing a little bit range bound trading. And if range bound trading, we will be trading in this large range and still in discount, and in the latter part of the year, going to the summer and the fall, that we might see the rally up to engage these or before the summer low, the rally up to engage this buy side, this CB, and maybe further. And if we go further, we might see the seasonal low reach in the other asset classes and start going higher. But for now, it is summer, we might see this rally up, even a weekly and also a monthly. This is what we have from this chart. This may be the first draw, approximately is the first draw. Maybe week to this order block, this monthly order block, and then start going higher. We have here a order block also. This from the weekly chart. This order block is right there with the here, but actually the order block start with this series of down close candles, so we can have the order block right there, and price already have traded to that order block, have expand trade to that order block. There is a small busy right there. Good to make these annotations so that you know which level you are referring to when you are on lower time frame. Not too much annotation so your chart is busy. That is this price have trade, validate and make this down close candle, series of down close candle, a order block. We have seen, I think this is on optimal trade entry also. Yes, this is an optimal trade entry, OTE, and the price of rally there. So really what I'm expecting price to do now, price already has expand higher, trade down again to this order block, respect this balance price trade, see where the body, the belly tells us the story, it is respecting it. I'm expecting price either to just tailed, not wick, tailed down to this order block or to this one, and then trade to the buy side to hunt or to engage buy side liquidity. That is what I will be expecting from the weekly chart. And normally I spend more time on the weekly chart, but remember this is just a dollar index. I spend more time for this. Give us the risk on, risk off scenario, the fiber, which is the Euro USD, and the forex pair GBP USD will be, if this candle is going up, or we are expecting it to go up to engage the buy side liquidity, we will see mark to market the sell side being chased or being traded to by those two other market. That is what we use the dollar index for. And the daily chart, before we go there, let me take a snapshot from this daily chart, this weekly chart, excuse me. this, make it bigger to have some more preview. I'm seeing price have created also another run. This high has been taken, this high has not been taken, so it's not a dealing range. Price just gyrating in this range, and I'm expecting price to trade lower, wick lower, leave us a long wick. The best part of it, if price trade and leave us a wick, long wick, and start going high, we will be aiming for buy side liquidity right away. For then it will have confirmed our analysis. We have now also the daily chart. It's the last one we do on this chart. And the daily chart, these are relative equal high also on this daily chart. I marked that with blue. Relative equal low. We are looking at a BAIS that has been traded to right here through a order block, which is in line with this order block. The so price of trade create a shift in market structure already, trade into this one, trade, continue to trade lower, make a high. This seems to me like what you can call the three Indian pattern from the Larry Corner Street Smart book. This drop is what I did not expect on Friday. I wanted to see price rally from this to take this relative equal high. Then it would be for me on the other side the nice run that I was expecting. We did not have that. So what we are now seeing, where price is now currently, price is trading to the downside, and that is in relationship to the Euro USD. It will be going to the upside, and the GBP USD we are going to see risk on situation. The daily chart, as what it is now suggesting, we are coming from the weekly, monthly, weekly chart. We are looking for price to make some turn either to from this low. How we will trade at this weekly order block will give us information. Even if we run these relative equal low, we won't engage yet. We will wait until price trade into them and spike up. Want to see how they will utilize this balanced price range from the monthly perspective, and then we will be aiming for higher prices on the daily chart. You go straight to the Euro USD. Just loading. This is your weekly review. We are analyzing the chart using the education that is been provided by ICT. We are hunting. We are now looking at with the dollar index. There is an inverse correlation. Normally, if the US dollar is going down, like we have seen, just saw, this will be going up, and that is what we are now seeing here. There is room for the market to drop, to still rally. If we see some bit dropping on the dollar index, price may want to go, and most likely will go. This is the daily analysis. This tool, that is the buy side. I'm going to be looking to when we see price drop and on the dollar index drop further. If price turn, these are relative equal lows. Those can be sell side objective for price to run to. And we are now in this season that it might be range bound. Careful how you trade this range bound trade, but it is large range enough for us to trade. Then the GBP USD, the same with GBP. I expect that was the time, I think, some cleaning of the chart. If price continue and the dollar index to go higher, we can expect this high to be taken, and also maybe if this also to be taken out also. But first we will be looking at this first one to be taken first out, and then with the turn, if there will be a turn, it can be right at the consequential encouragement of this week. If we see some turn, there is daily, we are looking at the daily busy here and some relative equal lows. I will be having my eye on them. There is some buy side liquidity there that has been engaged but not fully traded and made balance, so price may want to draw to these relative equal low. It can trade further, then this would be objective on the chart. But with now the dollar index trading bearish, it is risk on. We will be expecting the dollar, the cable to continue rallying to the upside and to engage these buy side liquidity, and because it is because of the risk on, risk off scenario. Normally I go to the gold, the crude oil, and the crude oil, and check some other markets, the bond ZBM or ZBU, it would be ZBU, but it is enough for this week. We will go first to the ESM, not ESM, ESU, and then we'll go to the weekly chart, not ESU, micro ES. And then we'll take 1 week, a weekly chart, or we can start at the monthly chart and see that we are seeing actually a continuation of some continuation to the upside. There we see an order block right away. This is the familiar pattern, a pattern I like to see. I am this is the monthly chart, so it is the color red, and this is the plus order block. When you see in price action, price trade and violate and validated an order block and closed near or below but near the close, the open of this order block, the next candle trade, have your set stop loss right below the midpoint of this, and then expect price to continue really higher. This is the pattern that we are looking at now. Right now we see where is price come from this monthly busy, and price is trading now to the upside. Price has been rallying up. We will be looking, we don't try to pick top and bottom, so we will be looking at the market to continue make higher high based on what we see in the dollar index, that it is dropping, it is bearish, and as long as it does not turn, we have this risk on scenario. So with the mark to market situation in in the dollar index and the forex pair, the fiber and the cable, we see a direct relationship in risk on. So we will be looking for buy opportunity in the other market. However, if we see some changing a turn in the dollar index, making it risk off, we can trust the market to then drop. There is this effect that is on the marketplace, which is the seasonal influence. And the seasonal influence, this is last month high, and then we have also last month low. Last month high has been taken out, now has been engaged and purged from this monthly perspective. There is currently there is a gap, a monthly gap, which we call, if the market close here, we call it a busy. This is monthly gap. I expected price to first return to, price rally and engage first the buy side, and price with the dollar index, with all the information that we have acquired from the other analysis, we are expecting price to drop as they already engaged last month high and drop lower. We will be having a soft bearish bias, but continue, because we don't try to pick top and bottom, continue with this bullish run, this bullish trading trend. And because I do not have any terminus where to aim for, I am just going to wait when price trade below this low, and then I can engage the market again. This is the kind of market where the market is keep on making higher highs and not really offering us a range or place where we can aim, and we can have, or what we can see, expect of what I expect. The month can continue and drop to make balance this drop even to this monthly bullish order block and start going higher, given that we are in a seasonal summertime where we can see large range expansion. We can stay in this expansion, or we can have a drop, engage this busy till the consequential encouragement and start going higher. We will be here monitoring it. 1 week, but you are seeing from the weekly perspective, we are looking at this relative equal high that has been taken already, been engaged last month, and this week inside this, put it on the background, and inside this we are looking at a weekly, a weekly busy that can be the draw of on price, and actually this seems to be some relative equal lows that can draw price to. What we are waiting for is to see some sign that the market want to drop to create some reversal to drop to the sell side, and then engage the market from that perspective. That is what we are going to be hunting on the weekly range. When we look at the weekly range expansion, where is the market most likely going to draw to? From now, it is not 100% certain, but I'm reasoning that we can continue this bullish rally as the soft approach, traded nimble. If you will engage the market and being advised with taking advice from your financial advisor, be very cautious in trading this bullish run. We can see this as a run to engage this relative equal high on the weekly range, and then start seeing some drop toward the sell side. There is now here a order block, a weekly order block, starting with this series of the unclosed candle. These are order block, and then we see there is a busy here, and there is this graded level. For now, we will leave them and want to see how the week will trade and reach there. Take a picture. We go to the daily chart, where we stay longer than on the weekly chart, when the weekly promised to rally higher. We look for buy side to be taken out. We see the daily chart have shown us this week a real shallow run. There is a, make notice of it right away, this is a daily busy. It has been traded back and forth, made balance. There is, however, there is some shallow run. The body is still not really being engaged. We are seeing here some busy. Use this one. Use this one. Use this one. In my eye, there is another one there, right there. Another busy. We have run buy side liquidity. There are liquidity right below this being engineered. So if they will trade this week, I can expect, I want to see what the news will be telling us, and if the news suggests some wild run, it can give us this run to drop to the sell side, at least to give us this large range trading. This is what we have. Swing low, range trading, keeping in mind that we are in a season where there is Parliament is in recess in the United States, but we are also in the election time. So we want this seems to me like perching this buy side liquidity, and then I expect price to drop lower. There is, for me, once more I'm emphasizing, no reason for me to chase buy opportunity for. I can trade nimble if I see a engineered buy side being engineered above marketplace on lower time frame. The drop, I see shift in market structure with displacement. I will aim at this high and create focus to trade another high. But where I will be very certain with taking a trade would be when I see us on the lower time frame, the 4H smart money reversal pattern. This is what I, for now, looking at the daily. I will be here there after 15 minutes after market open. Then I will close and we will be at the record on tape reading record on Monday, depending on the calendar. We go to the 4H. The 4H, you see indeed a run to take this relative equal high. Already there is some sign to drop to the sell side. This from the 4/8 perspective, it might be to rebalance this I don't make notation on the 4H too much, for I don't want it to be too busy. There are relative equal lows right here under this. There is an order block right here. There is a candle that have a wick right here, and we have last month high right here. So there are some 4H buy side and busy in these daily busy, so price might turn depending on how the dollar and how the week progress. I'm going to the 60-minute. From the 60 minutes is what I use to start to begin to apply day of weeks. This is the 4H closing price on Friday. This is close shop on Friday. We mark that. We look at the Thursday. This is where the market closed. This is where we see it. We do. There. We are generally in a large last week Friday, the 28th of June, we saw this. There is underneath liquidity from the 60 minute. We are now looking at how the market has traded. We are looking at yes, there. We see that this swing high is the daily. What I'm doing as I make notice of the daily. Daily high, and I do this like this, and the low. We get the flow. The market take this low here, create a lower low. There is also a lower low here, and start to run to take these relative equal highs. The market did take those relative equal. Trade this busy. Trade toward this on Wednesday and practically consolidate. Was expecting for them to drop. You may know why I reasoned like that. Was expecting for them to drop and go further. It did not work like that. We are now going to the 15-minute. And we'll stay at the Friday time frame. On the 15-minute, we do the annotation. I want to have Friday lunch hour annotation from lunch hour from PM 2:30. From here, I write right away the PM session, and the high and the low of this PM session is important. On the 5-minute, I use that for institutional order. On this 5-minute, I was looking at this run and thinking about a market maker buy model. We see a high created here, a low or higher high. If this swing low is taken, I will consider this down close candle, as a potential breaker. It is now a potential breaker. I want to see how they will take that low. If it is taken, I will look at it as a breaker, and will after it take it, I would like to see price rally to the consequential encouragement of this breaker and leave the upper quarter open and start to reprice aggressively to this swing low and this order block, not respecting them in any way. If I see they start respecting this consequential encouragement, I will be very nimble, be at the sideline. But I want to see them run to these down close candle toward these relative equal lows from the 15-minute perspective. The 5-minute is where I normally hunt. I hunt from the 5-minute. The 5-minute chart. We are looking at a SEBI, and price have already traded into it. I told you we have this I had this expectation that I would have seen this turn before time. There is still, it is 1 minute before we reach. There is not much to say. We want to see price trade through this swing low and engage it. If it engages, we will not chase it. We will wait until price do some repricing into it and then start trading, looking for price to trade. For now, it seems to me like we have shift smart money reversal took place already, and then we want to see price repricing into the downside. And with that said, I'm looking for the dollar index to rally to the buy side, turn and rally to the buy side. That will give me some confirmation to drop to the sell side. I want to witness the market open in about 7 seconds. We want to see how we will open. We have settled here. We open on discount right there. We open. All we do is that this was Friday settlement. We can call it now the new week opening high, because of the fact that we open in discount. We open lower than normal, than where we close Friday. All we do now is just the current. It will be the current new week opening high, opening gap high, and this is the Friday. Yes, it was a Friday, the 5th of July closing price, and price open right there. This is the Sunday. We have just witnessed that opening price, and price is now trading into its consequential encouragement. And it's what we are doing. We are not even trading. We are just looking at price, setting our Friday, Sunday, the 7th of May, opening price. This is the low. So we open in discount. Price trade past this swing low we were talking about. We are expecting price to validate this bearish order block. So now we have a bearish breaker in play. We want to see price, it is just an analysis, rally to the consequential encouragement of this bearish breaker. I can write it now as a 15-minute bearish breaker. When we rally to this one, we want to see price go lower. We won't be trading. We don't trade even from now. All we do is to mark this. We want to see how price is reacting on this consequential encouragement. This 50% is very important to us. This is the midpoint of this gap, and this gap consequential encouragement of the new week opening gap, the current new week opening gap. We are on the 1 minute, so I expect price to rally, to engage this into the 5-minute, 15-minute breaker, into the 5-minute. This is a 5-minute SIBI. Can mark it. We have traded into it, but I think it can rally still a bit to trade into it once more. At the kill zone, I expect price to do that and take this and give us a nice trade. This is the analysis from high time frame to the 1 minute chart. We are hunting on the 5-minute, the 15-minute till and the 5-minute chart. We are executing on the 1 minute chart, and there is buy side liquidity here. What I am doing is that we also Nasdaq, we check Nasdaq and Q. ISF opened in this count, we close right here. Sunday open right here, price close. And I like what I'm seeing here. For if there is a cracking correlation with regard to the closing of the Friday closing price was this, as the current week, a new week opening gap. If there is a displacement with regard to it, we see also that the Sunday opening price is not far from the this one open, and it did open in premium, meaning that for now we are expecting price to really to engage this buy side liquidity, on the 1H and down, and then drop. I most of the time make this one very bold so that it can distinguish itself, meaning it is the new week opening gap. I will have that it is just less than, and it is less than 2. I don't write it. This is the Nasdaq. I'm doing also the mini, and looking at what this one is doing. Is we don't trade the mini, the Dow index. All I'm doing is I'm watching what price is doing. This Friday closing price we open, there is a cracking correlation, but that is what we don't mind what is going to happen from now till tomorrow. September contract, we have opened here. This price is going to draw to this relative equal high, but we are not trading now. All we can do is to mark time. 5 minutes is to mark time tomorrow, Monday, and then from Monday we can watch what will happen to the market. Here you have your analysis for the week. I want to look at the weekly, the trading week. This is Sunday. I want to see Sunday the 7th. So this is the economic calendar for this trading week. We have Fed Chairman Powell speaking on Tuesday. Monday may be a nimble or chopped day. We have a second testimony from this. We have CPI on Thursday. We have PPI number on Friday. It's a very landmining calendar. We will be trading these numbers, these data, but very nimble. When we see that there is the trading of the day of the week, we see that Fed Chairman is going to be speaking on Tuesday and Wednesday. In the morning, we will be trading in the PM session. The morning, normally we reserve to trade it on the after 12, but because of the testimony, the Monday morning may give us a very nice run, and then the PM may be choppy or sloppy. Either way, we'll be hunting some setup tomorrow. Because of this business, I can hunt after 12. That I just reason why I will do before because big money will pull their money from the market because of this event, and then this will be very tradable days, but after 12. So in the morning, relax and come again after 12 to trade and engage this market. With these data, with this information, I can see I am trusting that the market can make the run to complete what I was expecting on the Friday. These lows to be taken. It is practically a market maker sell model. Expansion, reclaim block, and on all these reclaim block, I will be taking profits and then wait for the accumulation and distribution. The second stage of distribution might be a very quick run. Maybe with CPI they will hunt that. We don't trade in front of CPI, but after CPI we will engage the market. This rally what we are seeing here is just a accumulation of short. It's just trading into this breaker. We can make it a 5-minute breaker. This high, this strong close candle, and this down less strong close candle, and we make it a 5-minute breaker. It is better. So price is trading. I want to see the upper side of this breaker being respected and not traded to, but I don't know how much and how long it will take. What they will do in this day. There is a difference in the market opening with the Nasdaq and the YM. So it may be best for you to stay caution, very nimble, waiting for them to trade in tandem and then engage. This is the market with Odinga. Welcome. I'm welcoming the subscriber and asking them to join us and to see what we can do. Here we have our videos, our analysis, our execution, and here is where you can learn how to apply the market with apply ICT concepts in tape reading, in your tape reading experience. Thank you for your attention. Not before I have this disclaimer to read. Any information shared on this channel with you is for the purpose of entertainment and educational purpose. Be sure that you go for your financial advisor before you take any trade. The author expects no liability for any indirect, incidental, consequential, explanatory damage arises. Thank you for your attention. I'm greeting you once more from Suriname, and this is Algo, my algorithm that I am programming and writing in. Greeting and have a great trading week. Thank you.